Do you ever look at your bank account, see those few extra dollars, and wonder if there's a better way to make them work for you, rather than just sitting there, losing value to inflation? Or maybe you've been intimidated by the world of investing, thinking it's only for Wall Street wizards with mountains of cash. What if I told you there are platforms designed specifically to help everyday people, with everyday budgets, start building wealth with just their spare change? Well, that's exactly what we're diving into today. In the increasingly popular world of microinvesting, two names consistently rise to the top: Acorns and Stash. Both promise to simplify investing, make it accessible, and help you grow your money without needing a finance degree or a huge lump sum to start. But with similar goals, how do you choose? Which one truly stands out as the best for your financial journey in 2025? We're going to break down everything you need to know about Acorns and Stash, from their core philosophies to the nitty-gritty features and fees. By the end of this video, you'll have a clear understanding of which platform aligns best with your investing style, your financial goals, and your comfort level with managing your money. So, let's get into it. First, let's establish some context. The rise of microinvesting apps like Acorns and Stash has democratized access to the stock market. Historically, investing required significant capital and often the guidance of a financial advisor. These apps have flipped that script, allowing you to invest small amounts, often as little as a few dollars, and automate the process. This is revolutionary for people who are just starting out, or those who find traditional investing platforms overwhelming. They remove the barriers to entry, making it easier than ever to become an investor. But despite their shared mission, Acorns and Stash approach microinvesting from slightly different angles, and these differences are crucial when deciding which one is right for you. Think of it like this: are you someone who wants a completely hands-off experience, where your money is invested for you without you having to think about it much? Or do you prefer a bit more control, a chance to learn, and the option to pick some of your own investments? Your answer to that question will likely guide your choice. Let's start by looking at Acorns. Acorns is the poster child for automated, set-it-and-forget-it investing. Its most famous feature, and arguably its biggest selling point, is the roundups function. Imagine this: you buy a coffee for $3.50. Acorns automatically rounds up your purchase to the nearest dollar, investing that extra 50 cents into your portfolio. It's like a digital piggy bank that automatically invests your spare change. This might sound insignificant, but these small amounts add up over time, creating a substantial investment fund without you even feeling the pinch. Beyond roundups, Acorns offers a range of account types. You get a core investment account, where your money is placed into one of 5 pre-built, diversified portfolios. These portfolios are constructed with exchange-traded funds, or ETFs, which are essentially baskets of various stocks and bonds, offering instant diversification. Acorns uses Nobel Prize-winning modern portfolio theory to construct these portfolios, tailoring them to your age, income, and risk tolerance, from conservative to aggressive. You don't pick individual stocks. Acorns does the heavy lifting, automatically rebalancing your portfolio to maintain your target asset allocation. This is fantastic for truly hands-off investors who want professional management without the high fees of a traditional financial advisor. Acorns also offers Acorns Later, which allows you to invest for retirement with traditional, Roth, or SEP IRAs. This is a huge benefit, as retirement planning is often overlooked by new investors. They also have Acorns Early, which provides custodial accounts for children, allowing you to start investing for your kids' futures. And let's not forget Acorns Spend, their checking account with a debit card that integrates seamlessly with your investing, even offering real-time roundups. They also have Acorns Earn, where you can get bonus investments when you shop with their partner brands. Now, let's talk about the fees for Acorns. Acorns operates on a subscription model, which is a bit different from percentage-based fees common with larger robo-advisors. For their basic personal plan, which includes an investment account, IRA, and checking account, you will pay $3 per month. If you want to add custodial accounts for kids with Acorns Early, you will upgrade to the family plan for $5 per month. While these flat fees seem small, it's important to consider them in relation to your account balance, especially when you're just starting out. For very small balances, say under a few $100s, a $3 monthly fee can represent a significant percentage of your returns. However, as your balance grows, that flat fee becomes a diminishing percentage, making it more cost-effective. Acorns generally positions itself as having no hidden fees, though it's worth noting they charge a $50 fee per ETF to transfer investments out of their platform, which can add up quickly if you ever decide to move your assets to another brokerage. On to Stash. Stash also focuses on making investing accessible, but it emphasizes a slightly more hands-on approach, even for beginners. While it offers automation, it also empowers users to learn and make their own investment choices within a curated framework. Stash calls itself a personalized investing app, and it truly lives up to that name. Like Acorns, Stash also offers roundups to invest your spare change. However, a key differentiator is that Stash allows you to choose your own individual stocks and exchange-traded funds, ETFs. Instead of pre-built portfolios, Stash provides what they call curated collections or themes. These are groups of similar stocks or ETFs that align with certain interests or values, such as clean energy, innovative tech, or even females who lead. This gives you more control and a sense of ownership over your investments, which can be highly motivating for new investors who want to learn about the market. You can also purchase fractional shares, meaning you don't need enough money to buy an entire share of a high-priced stock. You can buy a piece of it. Stash also offers a smart portfolio, which is their version of a managed portfolio, where Stash's research team builds and manages a diversified portfolio for you based on your risk tolerance and goals. This gives users the best of both worlds, the option for self-direction alongside a professionally managed option. Stash's account offerings are similar to Acorns. They have individual brokerage accounts, retirement accounts, traditional and Roth IRAs, and custodial accounts for children. They also have a banking account with a debit card. One unique feature of the Stash debit card is its stockback rewards. Instead of cash back, you earn fractional shares of stock when you shop at participating merchants. This is a clever way to encourage continuous investing. With that said, thanks for watching, and until next time.